All right, it is a big week for tech. Check out the calendar. Amazon, Alphabet, Microsoft, Meta, all in focus as earnings season is off to a better than expected start so far in 2023. Tech has seen their shares rebound after a down year in 2022. Tech-heavy Nasdaq up over 15% since the start of the year. So what can we expect from these heavy hitters? Let's bring in Veronica Willis, Global Investment Strategist at Wells Fargo Investment Institute. Nice to see you, Veronica. So broadly speaking, what is your expectations for those tech heavyweights if thus far has been better than expected as far as earnings go?
I think there's the potential that those earnings could come in a little bit better than expected. But I think what's also important to keep in mind is that even with some of these earnings coming in better than expected so far this earnings season, we're still seeing a contraction compared to last year. And so that's something that we've got to watch out for looking forward at this quarter and next quarter's earnings, that potential that we might see that earning contraction for 2 quarters in a row.
So, Veronica, what does that mean for the gains that we have seen since the start of the year? Are we going to start to see that momentum fade quickly?
There's definitely the potential that markets could falter, volatility could pick back up, and the market could start to test the lows. I think what we've seen so far this year fits well within kind of a bear market rally. I'm not very convinced that we've seen the bottom of markets yet. There's a lot of uncertainty to come ahead in terms of global economic growth here in the U.S., and Fed policy.
So when we lop them together, but let's take them separately. Amazon's largely going to be an AWS story. Alphabet, probably the digital ad environment. Microsoft, perhaps ChatGPT. And Meta, probably the year of efficiencies. What one story are you watching that'll give you the best sense of where the economy is?
I think the big picture for the economy is looking at these bigger companies and seeing kind of where the quality is and what might be able to better withstand an economic slowdown. So we're looking for areas that will be a little bit more resilient than others throughout a lot of turbulence.
Veronica, what are some of those areas?
Right now, sector-wise, we do like the tech sector, we like the healthcare sector, and we like the energy sector. We think these 3 sectors are best positioned to withstand some uncertainty with the economic situation.
Big tech's bounce back would imply to some that the Fed tightening is over. You think not so fast. What do you see coming in the next 2 Fed meetings?
We think that the next meeting in May, there's probably going to be a 25 basis point rate hike, and probability is pretty high that there will be another 25 basis point rate hike in June. The Fed is watching inflation really closely, and inflation is still not where they want to see it. And that's their primary objective, to get that inflation down. The economy has so far still been able to withstand what the Fed has done. And I think we're not going to see that slow down in economic growth until the second half of the year. And so the Fed is going to do what it can in the first half of the year before we start to see that decline in economic growth.
Veronica, what do you think that slowdown is going to look like? Is a recession a sure thing?
I do think there will be a recession later this year. Not expecting it to be a very severe one, a moderate recession toward the second half of this year with the recovery in 2024.
All right, Veronica Willis, thanks so much. Great to have you here. Certainly a huge week ahead for the market.